So, Wall Street is the talk of the town today. So, the large sell off on Wall Street, as worries build about President Trump's tariffs and the stability of the US economy. Talk to us about investor jitters right now.
Sure. Well, clearly there is some nervousness that has been building out there now for a few weeks. I think, frankly, it probably started in early February with the initial announcements of potential tariffs on Canada and Mexico, and since then, it's been building and then waning. And over the course of the last week or so, I think it's gotten to a bit of a crescendo where businesses are now saying, look, under this type of uncertainty, it's very difficult for us to really build long-term plans. And the nice thing is, I don't think we're seeing anything substantial in the way of layoffs at this point. But on the other hand, with this high degree of uncertainty, I think businesses are kind of just hunkering down, not exactly making any big investments, and that becomes concerning for investors as time goes on. So at this point, I think it mainly is just about those jitters rather than any hard economic data on prices going back up or recession already being around the corner.
And speaking of that R word, okay, anybody who's turned their TV on, maybe seen a push alert, the word recession is being thrown around. It certainly gets people's attention because nobody wants to go back there. How big of a reality is that at this point?
Well, I mean, look, the president himself was asked about it yesterday on a Fox interview, whether or not he saw a recession happening this year. And, we speak about a lot of things that are unprecedented. I certainly don't remember a sitting president, answering a question the way he did. I hate to predict things like that. There is a period of transition because what we're doing is very big. That's as close as you get to a sitting president saying, "Yeah, there could be a recession this year." Typically there's a spin, there's a non-answer, and a lot of people clearly find that to be refreshing from a sitting president. But like I said, I've seen Treasury secretaries and other parts of an administration maybe make an admission like that in the past that quickly gets recalled. But for the president to say, yeah, we're aware this could result in a recession, but we think that long term that's worth it, it's pretty shocking.
Now, for someone just tuning in or who will be learning about this for the first time in our evening
Sure.
newscast, was this all sectors impacted, or is there one sector that was hit harder than the other?
Pretty much everything was impacted, but yes, the Nasdaq, which tends to be pretty tech heavy, was hit the hardest, off 4% to close the day. But both the S&P and Dow both each ended up down more than 2%. In early trading, you had the Dow off less than 1%, but did finish down nearly 900 points, over 2% on the day. So you can take that to mean that everything was down. But yeah, the tech heavy Nasdaq hit the hardest on this. And part of this too is investors taking a look at what have been the biggest contributors to gains over the last few years, but are also the most expensive areas of the market when you look at things like price to earnings valuations at the moment. And so, yeah, some big high flying names got particularly hit today. And I think part of that is just a general risk off trade as investors are digesting, again, that looming possibility of a recession. I hate to jump there too quickly because we do still have a very low unemployment rate. As I mentioned, I'm barely hearing mumblings other than the US government laying off workers, but these things can come quickly. And frankly, joblessness is usually a trailing indicator on the economy. Generally, companies don't cut until we are deep into a recession.
And what is your advice to people who are worried about their retirement and 401ks? Anytime, I mean, this is more than a dip, but anytime that there is a dip and stocks are impacted, you just tell your folks like this is not your time to look at your 401k. But of course now this obviously has people thinking about their 401k and their retirement top of mind. What is your advice to those people?
Yeah, look, I'm not one to say just ignore it entirely. I think that ultimately, um, it is very difficult to ignore because it's going to be all over the news, as you just mentioned. The Nasdaq just had its worst single day since 2022. When I'm in moments like this, I always just remind people to ask themselves, did I have a plan for a market like this? Let's assume we do get a recession and the market falls further from here. Did I make plans ahead of time? Do I know what they are? And can I convey that plan in a couple sentences or less? If the answer is yes, then oftentimes you're right. The answer is do nothing, turn it off. Don't open up the portfolio and take a look at what it's done. But if you're sitting there saying, no, I have no idea. I don't know how I'm prepared for a potential downturn like this and what I would do if I got hit by one, especially if they are in the position of needing to use that portfolio in the near future. That's where those questions get raised. And, there's obviously a big difference between money that you're saving for your next car payment, or if you get a broken down car, or your kids' college savings, or your retirement money, and they need to be treated differently as well.
And that is good perspective. Thank you. I do have one more question for you.
Sure, Courtney.
What needs to happen to right this ship that has really started to go wayward just in this past month here?
Yeah, well, look, I think that's the really tricky part about this is it's a lot of it at least being caused by policy uncertainty. And so I would ask everyone listening, would anyone be shocked if 2 weeks from now the president posted somewhere or had an announcement or posted on Truth Social that the tariffs that were being planned on Canada and Mexico had been worked out and there was no longer on the table, and instead we were moving forward with tax cuts? I personally wouldn't be all that surprised, and investors could perceive that very positively. And so I think that's where a lot of these nerves are coming from is I think people can see a path for where equities could perform quite well, but in this moment, just a lot of uncertainty around what the next policy is going to be, and everything from the administration is going in one direction, which is higher trade barriers with some of our closest trade partners.